Bitcoin miners and AI data centers used to live under one roof. Now, they're splitting and unlocking serious value. Today, we'll break down why companies are unbundling, how it changes the game for investors, and why even names like Eric Trump are jumping into Bitcoin mining. Let's get into it. Hey everyone, today I want to talk about something wild, but also kind of obvious once you really see it. If you've been paying attention to Wall Street recently, BlackRock, Fidelity, Larry Fink, you'll notice something strange. These big names, once skeptical or quiet about Bitcoin, are now saying things that sound familiar, really familiar. Let's talk about that. Listen to what they're saying. The national debt is out of control. The dollar is losing value. We need assets that are outside the traditional system. Bitcoin is decentralized. There's Bitcoin miners and AI data centers used to live under one roof. Now, they're splitting and unlocking serious only 21 million. Bitcoin is sound money. Now, here's the thing. These are all things Bitcoiners have been saying for over a decade. So how is it that executives at the largest financial firms in the world are now saying the same stuff? Well, two reasons. Reason one, some Bitcoiners actually infiltrated these places. People who understood Bitcoin, believed in it, and joined these institutions, they didn't forget what they believed, they brought it with them. So now, when they're in the room, they're saying the same things they said before, just with a bigger microphone. Reason two, these ideas are just true. If you're smart and you spend time looking into this stuff, really digging into the debt, the dollar, the global economy, you come to the same conclusions. Bitcoin isn't just hype, it's a real response to real problems, and now Wall Street is starting to admit that. Let's look at Larry Fink, CEO of BlackRock, managing over $10 trillion, 0 cents. A few years ago, he was silent or even skeptical on Bitcoin. But in his latest annual letter, he talks about exploding debt. He says, if we don't fix this, the dollar risks losing its world reserve status. And then he says it could be replaced by digital assets like Bitcoin. That's not just saying Bitcoin is interesting, that's saying Bitcoin might be the solution. So imagine this. Someone knocks on BlackRock's door and says, hey, we agree the system is broken. What's the answer? And they say, Bitcoin. It's crazy to think that it all started with an anonymous figure, Satoshi Nakamoto, posting an idea to a mailing list. A few people paid attention. They built, they held, they taught others. And now, 15, 16 years later, Larry Fink is basically saying, yeah, Bitcoin might solve this. That's not just adoption, that's a full-blown shift in the way money is understood. And the best part, it didn't happen because Bitcoin changed to fit the system. It happened because the system couldn't ignore Bitcoin anymore.
Yeah, it reminds me of the Warren Buffett quote where when he was asked about his biggest mistake in investing, he doesn't talk about the ones that didn't do well. He talks about the missed opportunities, right? And I think that's a lot of what we're seeing here is like basically setting yourself up to look like, I don't want to miss opportunity. I want to be ready, but that doesn't necessarily mean I want to jump the gun and go ahead full speed. Let's talk about another one that's probably near and dear to you. Hut 8 did a subsidiary or announced a subsidiary yesterday with Don Jr. and Eric Trump. What are your thoughts on that?
Another one says it's a scam, but you'll hear one executive say, Bitcoin is the future. What's really going on behind the scenes might surprise you. Let's break it down. BlackRock, JP Morgan, Bitcoin. And BlackRock and JP Morgan are very different businesses. BlackRock is the world's largest asset manager. They make money by investing money for others. JP Morgan is more of a traditional bank. They do everything from lending to payments to trading. So when we hear Larry Fink from BlackRock talking about Bitcoin as a flight to quality or a safety mechanism, it makes sense. They're looking for long-term reliable assets. On the other hand, Jamie Dimon at JP Morgan often calls Bitcoin speculative. And he's not wrong. A lot of people do speculate on it. Here's something you should know. public comments and internal strategy are not always the same. Larry Fink sounds bullish, Jamie Dimon sounds skeptical, but both organizations are building in this space. Why? Because this is what smart businesses do. They hedge. They plan for multiple outcomes. Think about it. If Bitcoin fails, no big loss. Maybe they spent a few million on a small team. But if Bitcoin wins, they're ready. They've already got people in place. They're not starting from scratch. Here's the real risk reward. Spending a few million on a crypto team that doesn't go anywhere? Small cost. Not having a team in place if Bitcoin succeeds and transforms finance? Huge opportunity lost. That's why JP Morgan is already offering blockchain-based services. That's why they're testing tokenized deposits. Even if they say they're not fans of Bitcoin, they're quietly building. It's smart business. It's risk management. They don't need to take a loud, bullish stance. They just need to be prepared. And if they're wrong publicly, it's easy to pivot later. Yeah, I was skeptical at first, but we've been researching it for years. Now we're ready. It's a clean, smooth move. Even the biggest names on Wall Street know that Bitcoin isn't going away. Some believe in it deeply. Others are just being cautious. But they're all playing the same game. Don't get left behind. It's less about being right or wrong today and more about being ready for tomorrow. That's why these companies hedge. That's why they invest quietly. That's why they keep teams working on Bitcoin and blockchain. At the end of the day, Bitcoin remains controversial. That's actually what keeps the market alive. Bulls and bears, believers and skeptics. But behind the noise, the smartest institutions are doing the same thing. They're preparing, they're building, and they're not going to miss out.
How much do you expect the Trump family to be involved in this, right? Obviously, I think their name carries a lot of weight, both as their father is the president, but also their family just has a brand and a reputation with them, either good or bad. How much do you expect them to be involved in like the day-to-day operations versus, hey, look, I'm the chief strategy officer. It's more of a, kind of title and I step away.
In business, we constantly go through bundling and unbundling cycles. First, companies bundle services together. Then when markets mature or valuations get distorted, smart businesses start to split them apart to unlock value. You've seen it in TV, music, even the internet. Now we're seeing it in Bitcoin mining plus AI data centers. They used to bundle Bitcoin mining and AI infrastructure together, but now they've split them into two separate businesses. HUD 8 focuses on AI data centers. American Bitcoin focuses on Bitcoin mining. Why? Because markets value these businesses very differently. AI data centers trade at 19-22x revenue. Bitcoin miners trade at just 6-7x. So if you keep both under one roof, your valuation gets dragged down. But if you split them, now investors can clearly choose where to put their money. And companies can raise capital more efficiently. Unbundling also means lower cost of capital. If you're an AI infrastructure company, you want to raise money at the higher multiple. If you're a Bitcoin miner, you want investors who actually believe in the mining business. Now that they're separated, it's easier to attract the right kind of capital and at better terms. This is good strategy. It's not about dumping assets. It's about creating pure plays investors understand. One reason this happened is leadership. The CEO of HUD 8, Asher Gnautin, is a smart deal maker. He structured customer contracts with optionality, added hedges, and created ways to unlock value without selling off key assets. That's the kind of leadership that matters in this space, and in fast-moving industries like AI and Bitcoin, the deal makers win. American Bitcoin, the new mining company, is 80% owned by HUD 8, but 20% is owned by investors linked to Eric Trump and Don Trump Jr., and Eric Trump is now the chief strategy officer. This tells us something. People with wealth in real estate, stocks, and legacy finance are starting to seriously look at Bitcoin mining. Why? because a good miner can produce Bitcoin cheaper than market price. If you can mine at a 20-30% discount to spot, that's a powerful business. So what does all this mean? It's simple. The last 5 years were about bundling Bitcoin and AI. The next 5 years might be all about unbundling them. If Hut 8 and American Bitcoin prove this model works, you can expect many more companies to follow. We'll be watching to see if this sparks a wave of spin-offs across the industry. So let me know in the comments, are we entering a new unbundling era in Bitcoin mining and AI? And do you think the Trumps joining this space is a sign of where things are headed? Thanks for watching, like, subscribe, and I'll see you in the next one.